The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, 19147. Let's take a look here at the German DAX. We had one heck of a rally this morning, folks, over there. The market, I guess it's probably even moved Deutsche Bank up, if that's possible. But we've had a 300-point handle. That's a lot of money in that DAX. So it's going to be interesting to see how that unfolds. We'll see how this thing works out here today as far as what we're watching this morning. But I do want to start out with the S&P because we're at a real critical level here this morning. I wanted to bring this chart up. This is from our good friend over down under, Mr. AB, down in Sydney. And we're going to see if that helps a little bit. We'll see what's going. Okay, there we go. Okay. All right, let's just get up here, and I hope the sound's coming through okay, folks. We'll see if it is. Move on here, but let's take a look here at the S&P here. And what we're going to be looking at here is an 8-hour chart, so it's about every day almost. But what you're looking at here is equal relationships. I pointed these out here with these green arrows. If you notice these green arrows, you see those three drive to a bottom pattern that we had back on October the 25th. We had three drives to a bottom back on the 22nd of November. Then we had the big move up right at that. It was a 61% retracement, of course. And then we had a large move down. Now, to complete that large move down and make it equal to what we did the last time, we need to get up to about 25.43. So far, we have been at 25.20. And it's interesting this morning because during the past several days of this big rally that we've had, this is the first time that we've had a small pattern that has emerged that may tell us that we might be at a top for today anyway. I'm not sure if it's going to be that way or not, but let's just take a quick look at it, and you'll see that we have a really nice three drive pattern set up there at 1220. And but folks, we have to really stop and think here what's happened here in the S&P, because I know everyone's talking about a short covering rally, and it certainly is a short covering rally, but there's something out there that could mean that it's a whole lot bigger than a short covering rally. And this is coming from somebody that is as bearish as Daniel Boone chasing grizzlies back in the 1800s. But that wasn't a very good analogy, was it? But let's take a look at the chart that I'm showing you that I think has got the potential, and that is this New York Stock Exchange Index. Remember, this New York Stock Exchange Index is the real market. It is the one that has 2,300 stocks of the best stocks in the world. There's foreign stocks in there also. They are cap weighted, so this is a true value of what the stock market really does. It's not like the NASDAQ NQ where you've got 10 or 15 stocks that made everything run, or the Dow Jones with only 30 stocks. But this is the fact that we hit that spot on 61% retracement over those major cycles that we were looking at around the 24th. That means a lot to me, because that means we could have a big rally. Remember, nobody thought this thing could go down. Now nobody thinks it can go up. So it's when the only way is up, the only way is down. And when the only way is down, the only way is up. So pay attention, because remember, one of the big things that we were focusing on this week, of course, was the fact that we were looking at that fear index that we got from Dennis Gartman. And here we went right down, and it was right near the bottom day. Terry's asking, does equal time and price have a three drive? That is very close to equal time and price, Terry. If you'll put up a 15-minute chart and do the work yourself, you'll see that the time and price has been very, very similar. In fact, the pullback that we had here from the 25.20 went right down to 25.02, so that's held it. Anytime we get below that 2,500 level, I would believe that this would be a perfect indication of what we're looking at here. But this is a really powerful rally. We have to respect that. I know some of the folks out there, we did some buying the other day. How equal does it have to be? It's got to be very, very close. I don't think you can do it. Well, you can do it mathematically, but I just eyeball it. And if it looks like it's within a bar or two, in the ABCD leg, if you have the AB leg and the CD leg equal, and the same number of bars in the AB leg equal the same number of bars in the CD leg, that's an ideal situation. And not only that, if you look at the slope of the line, if the slope of the line is running at, say, 60 degrees in both of those, that's telling you that time and price are pretty much equal. Now, if the slope of the line of the AB leg is 60 degrees and the slope of the leg of the CD leg is 45 degrees, that's a much weaker market. So that's a totally different animal. With this one that we're looking at here, they're very close to being equal. The slopes of those lines are very, very close. And if you look at it, you can see it really. Someone's asking, is Amazon 3 drive? No, it cannot be, because it's not that high. I'd have to look at that. You'd have to, on a daily, it cannot be. No, there's just no way that Amazon can be anywhere near that, because first of all, it's nearer to a bottom than it is a top. And we're looking at a 15-minute chart versus a daily, so that cannot be. And it's not equal. That's absolutely sure. Now, you remember we had those really nice 3 drive patterns in the NASDAQ that totally fell apart, on the 22nd of December. I believe that was the day. No, it's the the morning of the 24th, Christmas Eve morning, is when that whole thing fell apart, because all of those broke to the downside, big time. So the key to the 3 drive pattern is it's got to look like 3 drives. I mean, it's got to look symmetrical from the eye. That's really the whole thing. The original pattern from that comes from, of course, George Cole, Secrets and Key to Speculation, back in the 1930s. John Hill brought it to my attention back in 1970. And then when I got the Gartley book in 1971, I found that, much later, but it also had the 3 drive. But it's a beautiful pattern when it works, but it's got to have good symmetry, and that's the key to what we're watching here. So let's pay attention to that one, because that's been a huge move in this, and I think it's the start of something big, folks. If it was really a bad short-covering rally, it wouldn't have done anything. It wouldn't have gone 200 handles in 3 days. That's a big move, folks. So we have to pay close attention. And another reason why I think it's going to be a possibility of a major bottom is the fact that the banking index, and that's the one that I followed to say that we were going to have this huge break, and we did break, but look where we stopped, for heaven's sakes. We stopped at the exact high of 2015, which was a perfect 61% retracement within like 0.2% of the low that we made back in February of 2016. And if you go all the way back to 2009 in March, that was a 382 retracement of that move. So that's big time stuff if you're looking at Fibonacci, and I look at Fibonacci. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back, folks, and we're going to take a look at soybean meal. We're in the March contract right now, and we're going to be looking at this on a little bit shorter term time frame. What I'm going to do here, as you can see on this long-term chart going back, over the past year, when you get down to an area where things have consolidated over the last couple of months, the best thing to do is to go to a function in your chart that you can blow up the chart and look at it on a shorter term time frame. And if you look at this just over the time from August to where we are now, you can see a really nice head and shoulders pattern has formed here as of Christmas Eve. We've had a little 2-day rally in here. We should hold that 303 level if this is good. And the reason for that is, if you look closely, you can see there's 2 ABCD patterns that started back on December the 3rd that complete down here at 303. We're trading around 306 this morning. So this is a very, very low-risk trade if you're going to be looking at it. And what's interesting about it is it's happening during the time we have these tariffs that have been going on with China, and China has been buying some soybeans from Brazil, but they can't do that very long because they're almost out of beans. And so they're going to have to come to us eventually to get soybean oil and soybean meal. So it's going to be, and soybeans themselves. So it's just a matter of time. How these tariffs turn out, folks, I have no idea, and I don't think anybody else does either. And I don't believe it had anything to do, with how the market sold off. That was the excuse that it needed. But those patterns that were there, along with that massive astrological things that we had on the 24th and 22nd of December, were very, very important. And I think that's what did it. Folks, we hit those spot-on numbers so nicely in that New York Stock Exchange index and the banking index that we really need to pay close attention to this, because this is it's a really big thing, in my opinion. Since we're talking about Fibonacci numbers, let's just take a look here at the E-mini S&P as of right at the close yesterday. I haven't quite updated it. I updated it for you with the 3-drive pattern. But if you'll notice here, and you'll notice that that 3-drive pattern was right up at that 1.27 expansion near 2520. If that is going to be the case. But what I wanted to point out here, and if you don't believe in Fibonacci numbers, folks, and 50% is a Fibonacci number, it's an equilibrium number. I like the expansion, the contraction numbers better, but it is an equilibrium number, 1/2. But I want to show you this. Look at the S&P exactly at the 50% level. Now, what do you think the odds are that we're going to have every single one of these puppies hit exactly the 50% level? And if we take a look here at the NASDAQ, exactly at the 50% level. And if we take a look here at the Dow Jones, you're going to see the Dow Jones exactly at the 50% level. Now, what are the odds that they hit those numbers exactly? And they're all trading at the same time with different people. That ought to, that ought to mean something, I think. So we'll see. Anyway, we'll figure out what's going to happen with these markets eventually. This weekend, we're getting ready for the year-end report where we've got to look at the currencies. And since we're talking about the currencies, we've got one that looks like it's ready to have a pretty good move. If you'll remember, we were looking at this the euro. And it was relatively weak down there at 1364. We had a little sell-off, stopped at the 61% retracement. And then what we did is we took it on a 30-minute chart to take a look at it. And as we looked at that, you can see that really nice 135 pattern that formed there at 1400. Well, folks, we backed off about $600 in the euro at that point, and then a euro took off. And we've gotten all the way up to almost making the old high back here at 1480. And I think if we take that out, that has ramifications on that U.S. dollar, because this is the reciprocal of the U.S. dollar. If this goes down, the U.S. dollar goes up. And this is going up, that means the U.S. dollar is going down. So we'll see that. We'll see what that's going on. Tucker's saying that 90% of stock volume is done by bots. I don't know about the volume in these things anymore. I really don't. I know there's a whole lot of volume in ETFs, but on the futures volume, you can see what's going on there. So, they can't really hide from that because that's posted every day, at the end of the day, what the volumes are. They are down because it's Christmas time, and that's why we get increased volatility, because there's just not as many players. That's the bottom line. So, keep in mind that, that's one of the reasons why I'm a technician, folks. All this stuff that's out there, it just absolutely boggles my mind. And all I try to do is look at those bars. And I know I'm wrong some of the time. I'm right some of the time. But by golly, it'll lead you to the promised land more than trying to go through all those darn reports. By the way, I heard over the weekend that the Foundation for the Study of Cycles is going to be revived. The man that was running it for the past few years passed away unexpectedly over in Romania or Bulgaria, where he was living, and now it's being taken over by Dr. Richard Smith and Jake Bernstein and Larry Williams and oh dear, what's the guy in Scottsdale? Mr. Z, who's that smart guy in Scottsdale that does the 13? Boy, memory slaps me in the face once in a while. I'll remember in just a second. Oh, well, anyway, those 4 guys are going to revive it, and they're not going to sell anything. They're just going to promote education, much like Edward Dewey wanted it. Of course, Dewey passed away in 1978, and that was after the Hearst stuff came out and all the other stuff, and it started going down, and Tudor Jones took it over for a while. And but now it's going to be revived, from what I understand. We'll be able to see if that's going to be the case. But they do have great information. They certainly have a great library of cycles, and they have a lot of stuff on astrology too. So we'll see how maybe that stuff will start to come up. I've always said that sometime before the last trade, there's going to be a segment on Bloomberg and CNBC, maybe 5 minutes to start off with and maybe longer later, about the astral cycles, probably starting with full moons and new moons, eclipses, that type of thing, and then eventually get into Mercury, Venus, and Jupiter and all the others. So we'll watch it. You remember we had Tim Bost on about a week ago, and he posted this forecast that he was using, and I wanted to just bring this up because it's starting to act like it's working, and we have to watch it because there was a bottom coming in here. We've had this huge rally. You can see that's into this early in January. It looks like it's going to get a little choppy, and then we're going to top around the looks like around the 18th. Looks like around the 18th of February. And if that's the case, then that would be the ideal situation, because that would mean we would have a 2-month rally, and then we'll be able to see that. It's really interesting. Oh, David White is posting in the evening of January 20th and the early morning of the 21st, a super moon and a total lunar eclipse will coincide, would be a real treat for stargazers in the United States. Hey, local weather permitting, yeah. Well, I love those super moons. That's when you have the moon as close to the Earth as it possibly can be. We're going to take a little break here, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to talk just a tad here about the silver market, because we've had a pretty good run here in silver from the bottom, and I want to go over silver and gold here a little bit, because we're getting up near the 61% retracement in the gold market. You'll be able to see that when we looked at this, it stopped at the 50%, backed off a little bit, and now we've gotten up as high as 1284 and change. The 61% retracement comes in at 1291. That would certainly, I would believe, bring a move to the downside, but we'll have to wait and see if that is going to happen or not. It's still a little early, but if you remember, I posted one of these charts from one of our friends from up in Canada that had sent us about the long-term picture in silver. This goes back the last 50 years. And what you're looking at are these descending triangles that you see here. We've had 4 of them. We're in the 4th one right now. And I just wanted to bring you up to date of what that looks like when you're, when you're setting at those levels and in these triangles. Remember the low that we made just recently at 1385, being a 1.618 expansion on the daily, but it was also setting right at the 78% level of the low from 2009. And I've always said here at TFNN, going back as long as I've been on this program, since it's 2007, that everybody should own some silver rounds, these 1-ounce coins that are produced by the government with the St. Gaudens. It's really an incredible investment, I think, and they're beautiful coins to that extent. But let's take a look at where we are here on the long-term chart here of the silver when we look at these triangles that they're bringing out in these descending triangles. And as you can see here, over the last 3 years, we're down in this area where we really need to get it above $16 an ounce for a really big breakout. And you'll know that silver has some big runs. In 2008, starting in the financial collapse, it went from, $8 all the way up to double top almost at 50. And the old high back in 1980 was $54 an ounce. But the problem was there was hardly any business being conducted back in January of 1980 when that was done, because there was just everybody was afraid to do anything, either buy or sell. So we'll watch it very closely, but we should have some resistance in that gold up around that 1290 level, and then we'll see how that is going to happen over this next few weeks. So we'll watch this closely also, as we do everything. We still believe that bond market is going to be the big problem. And it's really quite amazing, folks. We've had a 2,000-point move in the Dow Jones, and yet those darn bonds and notes are still up near their highs. It's just really amazing that it's done that. Now I noticed that the my alert just flashed that the S&P just went below 2,500. That basically says that 3-drive pattern probably has some validity, and we'll see what the next move is. But remember, we've had a huge move. We've come off 200 points in the S&P since December the 24th. So this has been one heck of a rally, and I believe we're going to end we could end the week up, and that would be very unusual given the fact that how far down we were when we started this week. So we'll see, how that comes out. One other thing, our good friend Cy Monley at Sylvia's Financial is extremely bullish on the wheat market. He's looking at Kansas City wheat, of course, along with the December wheat, but he feels that there's problems in the crop stuff that he's hearing from Russia and other parts of the world, and wheat is very susceptible to any of that. So if wheat starts to move higher, you need to pay close attention. It's down at a relatively good level now in March wheat, trading around the 510, 512 level, and I believe that offers good value also, but we'll need to wait for a really nice completed pattern there to get an entry that would be pretty easy to hit. So we want to watch that. Oh, we got a caller from New Jersey. Victor, what can I do for you?
I was just looking, this is a company called MYGN. Do you think it's any feasible buy entry point yet?
What is the price of it, Victor?
At $27. Mary YGM, that's a symbol.
Mary YGM. I don't know if I can get it up or not, but hold on. MYGM or N?
Yeah, Myrad Generics. It's a big pharmaceutical company.
Oh, NYGM. Okay, hold on. Let me see if I can get it up here, and we'll take a look at it together here. And I will be able to tell you quickly if I can. You know, we've made some type of a bottom in stocks, that's for sure. But the problem is, are we going to be able to? You know, I'm not able to get that stock, Victor. I don't know why.
Myrad Genetics, Mary Y and the letter GM. That's a big
M like in mother.
Mother Y. GM.
Yeah, well, I can't get that stock. I don't know why. It's just not. I don't know why. What's been the low on the stock?
27. The high's like 50.
Okay, well, you if it's trading around that price right now, you put your stop under the low and hope for the best. I would frankly wait.
This is a short covering rally into the new year. They're decorating. You know, I think our government's better than China right now, and you had a big buy order 2 days ago.
It could be, that's for sure. But I still believe that, you know, we've made some type of a major bottom down in here. So this stock could be, is this related to China, MYGM?
No. It's a pharmaceutical company.
Okay. Well, unfortunately,
you don't
Victor,
think they're doing like a global reset because that's why the government shut down, and maybe over the weekend or in a week or two you'll have a new currency.
You know, that's Jim Rickards.
I think so.
And yeah,
the market should be plumbing right now with the big government shutdown. You know what I mean?
I don't believe those things when I hear them. I don't see it in the market at all. So
you don't see a global reset.
No, I don't think there might be a global reset. That's why I believe everybody should own some silver and also carry some cash. Because if there's a global...
I would have some cash for the next 12 days. I think things are going to get a little hairy next week.
Yeah, well, they
I'm going in my bunker. I'll talk to you later. Bye.
Okay, thanks a lot for calling in. Okay, folks, we're now trading at 24.95 here in the S&P. We've come down about 25 handles. And we're moving 25 and 40 handles at a time, so $1,000 and $2,000 moves in the S&P is really nothing anymore. And if we look at this just a little bit closer here, I'll post this up so we can take a look at it. We should have some really good support down around 2470 this morning, and that the key time to watch, of course, is about the around 10:30. In the morning. If we're making a low around 10:30 in the morning, yeah, that might be it, because it's had a tendency, I don't know if the Fed's in there doing it again like Shane used to tell us, but sometimes around 10:30 in the morning, there's usually a pretty good move of some kind. So watch that 10:30. That's going to be in about, about 40 minutes. Keep an eye on that, because that could be something that would be, what's that, 20? Be 60 minutes, but anyway, no, 40 minutes. Anyway, keep an eye on that. That'll be really interesting. 877-927-6648.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to bring to your attention the U.S. dollar. You'll notice here we made that 61% retracement down there at about 96. We're still holding in that same range. That's very similar to what we're seeing in that euro versus U.S. dollar between 114.80 and 114.20. So if we get a move either above or below those levels, it'll probably make some type of a move. Now, over the years, I've noticed that the first of the year brings about some pretty interesting changes in some of these foreign exchange cross rates. So I'll be working on that over the weekend in the newsletter to try to focus on what that's going to be over the longer period of time. And also another one that we really should watch, because we got a 5% move off the bottom, and that is the crude oil. Crude oil made a really nice run from 42.40 all the way up to 47, which is one heck of a run, 5% in one day. That was when the market, our stock market, was going quite a bit. So if you'll take a look at that, I'll post what I'm looking at, and I think we've got a possibility here of a really nice Gartley if it could get down here to around the 44 level, down about another $1 a barrel between it. Well, it could go all the way down to 43.20 because that's the 78% level, and we'll see it. Yes, I'm following Bitcoin, David, quite actively right now because of the fact that we're watching a market that has gone from 19,000 down to 3,200, and that ABCD pattern on the long term is at 3,800, and we've been here for several weeks now. So stop and think, this thing was selling for 6 cents back in 2009, and now it's at 3,600. You know, that's, if you'd been gone on vacation and saw it was 3,600, you'd be happier than a, pig in a pen. But this is fact at 19,000. I don't believe it was a bubble, because if it were a bubble, it would be back to zero. It doesn't usually take a bubble much to take it back to zero without any trouble. It doesn't look like that. Anyway, watch this crude oil, because I believe we got a shot here at around that $44 a barrel level. There was no number down there at 42.30 because we shattered the 78% level at 47.40, and we went $5 lower than that, and now we're coming back to retest this. So there's a possibility on a short-term basis, looking at the hourly chart, that we might be able to get a run here in the crude oil, and that would be nothing more than an ABCD move, taking you up to that old breakout level of 49.5, and that would be a $7 or $8 move in crude oil, which is nothing more then a short covering rally. So those are the ones that we're watching here, really closely. So that's what it looks like early this morning here in some of these. The silver and gold have still maintained, their moves here. We're trading around 1280. In the gold, our high has been 1284.70. And as I mentioned, there should be some really strong resistance at that 61% retracement of that whole move at 1292. That's $12 from where we are right now, which is only a heartbeat away in this if you're watching it, because it's pretty important. Now, in the S&P, we just stopped at that 78% level of the overnight low that we had down around 2479. That 78% level came in at 2490. We hit that spot on, and we've rallied already 15 points. So this is when you're trading this now, folks, you're probably going to have to either go to a shorter time frame or expand your stops, because we've got increased volatility, and it's here to stay. I think we'll see volatility way up above 60 or 70 later in the early part of the year, and but that's great for pattern recognition, because these are the things that make these patterns move the way they move, and that's what's so exciting about it. Well, we'll see what happens. Someone's asked a question about the Apple. Apple should have, we got down as low as 146 in Apple. We should get a 10% rally off of that, $14. That's going to take it up around 160. So watch Apple around 160. That should have a little bit of a resistance level based on what it's done in the past. But again, this market has told us that, it's got some legs here. The reason why it has the legs, folks, is because of that New York Stock Exchange 61% retracement. That you can't make that up. That it stopped exactly at the number, and the banking index stopped exactly at the number. And those mean a lot to me. And I'll tell you one thing really serious. If we go below those numbers, be very, very careful, because this market would have the tendency to do what it did in 2008, because when those things fail, it's a really, really negative thing. We saw that in 2008 when we rallied up into early October, and then we took out that low of August 15th of 2007, which was such a critical low. That was a day that the Dow was down, I think, 300 points, and the Russell was up on the day, and the NASDAQ was only down a point or two. And from that level, we just went straight up into new highs into October 7th, where we finally topped. So I want to post this other chart again from our friend over in Australia, because it's a really, really good chart showing what we're looking for. I'm going to have some better ones for the newsletter. Well, they'll describe it a little easier, in my opinion. But here's what we're looking at here. You see here that those green arrows are basically telling you the major Fibonacci resistance and support. The two lower green arrows are just showing the three drive to a bottom pattern. So the area that we're looking at up here for a potential rally is up around 26.43. Well, we've been as high as 25.20 today, so we got another 110 handles to go to get up there. So it's, at 25.43 is the number we're looking at. So it's another 20 handles higher. So we want to watch 25.43 when we get up to that area. If it takes a few more days to get there, then you would have a low risk shorting opportunity, I would think. So that's what we're paying attention to this morning. And I'm not sure, whether it's going to turn down from here or up from here, but we're going to be in an up week on a Friday in a low volume week. So I don't think the market's going to fall apart today. It might be down on the day, but I certainly don't think that you're going to see anything down 500 in the Dow or anything like that. It had its chance to go down, and it reversed those chances, and that was a good thing to really watch. Oh, excuse me. We'll be right back. Just a second here. I have a little bit of a seasonal allergy here. Anyway, we'll be watching this level of 25.43 in that S&P. That's going to be a really key one to look at. We're in the third day of the rally now. We came out Monday. We were down big. Tuesday closed, and we're up Wednesday, Thursday, Friday. So this is a 3-day rally. Whether we get 4 or 5 days, we'll know that as we come into early early next week. Excuse me, folks. I'm sorry I have to sneezing so much. We'll be back right after the break.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Boy, it's hard to believe, folks, that we are getting ready for a new year, but that's the way it is. We'll have to wait and see what happens in the new year, but it's going to be a beautiful one, no matter what it is. We're going to have some great moves. With this volatility increasing and everything is really right down the alley of Fibonacci and pattern recognition. Remember, folks, keep in mind that that number that we hit in that New York Stock Exchange Index is so very, very important. It's just, I just can't tell you, between that and the one in the banking index, which I felt was the biggest problem because the problem lies in the credit markets, not in the stock markets, that's is if we go below that 107 level in that New York Stock Exchange Index, this thing's going to fall out of bed. But I don't think that's going to happen right away. I think we're going to have one heck of a rally, and it could be a lot bigger than some people think, because there's so many people that are out there bearish. I mean, stop and think, on October 1st, everybody was bullish. You know, you had a greed index way out on the right. Now you got a fear index that's way out on the left. So you're going to start to see some really big swings. Keep your eye on this wheat market too, and also the corn market, and also the soybean meal market that Mr. Z pointed out. Those are looking pretty good. And if China and the U.S. come to some type of a tariff agreement, they're going to be trading a whole lot higher than they were before that agreement. So if that happens, watch the markets, because sometimes they tip their hands to what's going over the over the course of a few days, whether they're going to actually do that. So we'll be watching it really, really closely here. As I guess I get using that really, really closely all the time, but I do. You know, I stay up most of the night. In fact, I'm a little overtired today because I was watching that S&P last night, making some really great swings, and also the fact that we got up to some key levels in the Canadian dollar again, and also the euro. So these are the keys. Anyway, we will be back here with you on Monday, bright and early. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!